Tewksbury, Mass. And if you haven't heard of Tewksbury, it's 8 miles from Amherst. We're a little town of about 1,700 people. Now before we get going into the finance piece, let's take a look at what the responsibilities of both the collector, the treasurer, and the finance committee are, because they are important in the whole finance scheme, of course. Okay, let's look at the treasurer. Most of you probably know all this because you're employed in either a collector or a treasurer's office, but we'll begin anyway. What does a treasurer do? Well, of course, he or she is the cash manager of the town and responsible for the deposits, investments, and disbursements of all town funds. Also, they issue town debt with the approval of the select board or the council or whatever kind of upper body jurisdictional entity you have. During the year, they also have to determine the cash needs of the municipality. Say, for example, you have a very, very large payment for a school, regular operations to come up. Well, then he has to make sure, or she has to make sure, they have enough money on hand to be able to cover perhaps $500,000 or $750,000 in one lump sum. In long-term debt, he or she works with the financial advisor, bond counsel, the town accountant, and other town officials to prepare for the sale of the bonds. And they also have to be involved in the getting of the bond rating, which is necessary in order to have bonds. That's a quick snapshot. Let's look at the collector. There are two different kinds of collectors. You may work for a town collector. You may work for a tax collector. If you work for a tax collector, you are only collecting taxes, which would be such things as real estate, personal property, Community Preservation Act, motor vehicle. That's pretty well limits you. The town collector, in addition to what's collected by the tax collector, also collects other amounts due the town, such things as charges for permits, licenses, and municipal utilities, water, sewer, electric, etc. So the town collector has a very much larger work field than does the tax collector. I was made town collector when we had a situation where the ambulance bills had to be collected. So therefore I became town collector so I could collect them. Thank goodness that stopped quite quickly. The collector must have and maintain an efficient and reliable record keeping system. Most of us have some kind of a commercial program. They have to deposit money, preferably as soon as received. Turn over receipts at least monthly to the treasurer, and that is by statute, you're required to do that, and pursue delinquent accounts using the tools provided in the Mass General laws. Generally, the most efficient one for real estate is to go on tax title within the statutory time limit, which is 3.5 years from the end of the fiscal year that we're dealing with, to secure the lien. Motor vehicle, the most efficient way is to go through the warrant process and then mark it at the registry. Finance committee. We're going to talk a lot about the finance committee because they're an integral part of the budget setting process. And their purpose is to advise and make recommendations on the budget and other areas of finance. Their only statutory work is to make reserves, make transfers from what's called the Finance Committee Reserve Fund, which is a fund that is funded for hopefully each year to handle when a department overspends their budget in an emergency situation. It is not because you failed to budget properly. It is more because something has come up that has drained your budget in a specific line item and you need more money. One of the favorite ways of doing that, let's face it, is snow removal. It can be vehicle repairs and such as that. They also have to recommend the budget, the finished budget, to town meeting or to the council or wherever your statutory judicial upper body board is. Now let's talk about budget, because that's the big part of this speech. First of all, there are two different kinds of budgets that we're going to deal with. One is the operating budget. This is pays for your pens and your paper, your salaries, etc. There is also a capital budget, which, as it implies, is for very large purchases. Let's start with the operating budget. There are 6 definite steps in handling or processing a budget. The first is to plan for it. What this means is that you have to set up the time frame for your applications by your departments. You have a set deadline because you have to have it ready for your town meeting or your council meeting that considers the budget or whatever. I'm going to refer to everything as town meeting. It's easier that way. And we know when the town meeting is. You know when you have to post the warrant for the town meeting, which is a document that tells everybody what's going to be considered at town meeting. And therefore, you have to work backward to figure out when you have to have all the applications in from all of the departments, be it the very large ones from the school department, or perhaps the police and fire departments, or the very small ones from such things as animal control, or even the moderator who may get a salary. So then we have the time frame. The applications come in. Well, first they're sent out. And usually in our case, in our town, the finance committee is the one who kind of creates the document that goes out to the departments for them to apply for their budget. Once the budget requests are all in, then they're reviewed by the finance committee, and hopefully they are also reviewed in person with each department head. And then you have then they put it all together to make town meeting. They also have to develop revenue estimates, and that's probably the hardest thing. That's either done by finance, or it's done perhaps by your administrator or your finance director, or someone of various titles. There are certain problems with dealing with guesstimating, and it is a guesstimate of what your revenues are going to be for the next year, because we don't know. One of the big problems is we never know what the amount of the money that the state is going to send us in state aid. Because although the state is supposed to have their budget done by July 1, lately we have seen a lot of instances where it is not done by July 1. But at the same time, we have to have our annual town meetings before July 1 by statute. So as you can imagine, this creates a very large problem. You have to guesstimate. Generally, they go on the basis of what the governor, the Senate, and the House are putting out as their budgets, and what has happened with them as the Senate and the House negotiate their two budgets and try to merge them along with the governor's budget. It's a very, very complicated process, and it's a very, very stressful process for whoever is developing the revenue side of the budget. The other thing that we really don't know is what I call the plug figure. And that, of course, is the amount of money we have to raise from real estate and personal property taxation. And that gets put in as the expense side of the budget is being created. In expenditures, of course, we have certain types of monies that are pretty well known. For example, if you have debt, somebody, usually the treasurer, has a debt schedule. And so they know how much money is going to be required and in the next year to pay the debt and the interest. So that's an easy one. There's also a lot of other things that may be known, such things as payments perhaps to your retirement system, or payments to your county if you have county payments. So once you get your expenditures that you know, then you have to really start working on all the department heads. So you develop your form, you send it out. Our form that we receive, it may be a little different than yours, because it also has on the bottom a place for us to put down any future, not next year, but future anticipated capital purchases. So for example, if the highway department knows that in 3 years, they're going to need a new grader at, God knows what that costs now, they would put it down on their list. So therefore, it can be put in along onto the 10 or 15 or 20-year capital plan that hopefully your town has. Therefore, we will have a better idea of what is coming up in the capital item, because these can be huge and can be definitely affect our budgets. Now, once you submit the budget, then it's time for you to review it with the finance committee. And I hope that all of you have that opportunity to do just that. I remember I had an instance probably maybe 20, 25 years ago when I sat with the finance committee and they said, we're going to cut your budget. And I looked at them and said, fine, then you will put in writing what taxes I'm not sending out. Because what is my job? My job is to send the taxes out. So you've got the envelopes, you've got the postage, you've got the printing of the bills, and things like that. And if they start cutting budgets, then how am I going to function? So needless to say, they didn't cut my budget. But it is very important that you educate your finance committee on A, what you do, and B, how you do it. My budget in particular is very, very detailed. I give them a step-by-step breakdown of everything from the cost of my lockbox service to the cost of going to meetings. Everything is broken down so they know exactly what I am spending the money on. Now, that doesn't mean necessarily that it all goes to where it's supposed to go, because when postage goes up, if I haven't budgeted it, then it comes from one of my other line items. But the main thing is they know approximately what I'm going to spend from each in the overall picture of my budget. So now once you met with everybody has met with the finance committee, the next step is for the finance committee to put together the budget, plug in that number that they needed in order to get the receipts to equal the disbursements, because of course that's required under the law, and the budget is ready to go to the town meeting or the council meeting. Now, that doesn't stop the finance committee's work, because after the budget is approved and we're in the new fiscal year, they also watch and monitor the expenses. So they know if there's something that's going to happen that is going to drastically spend in certain line items that may not have been expected, and therefore will require a call from the Finance Committee Reserve Fund that I mentioned earlier. It also enables us to verify the amount of money that we are actually spending, if in fact we keep a spreadsheet. And that's something all departments should do. Keep a spreadsheet of all of your expenditures. Start with the amount of money that you've been approved, and then every time you do an expenditure or request money to, for an expenditure, you write it down. Then hopefully you receive from either the accountant or your town manager or someone every month a printout, even if it just gives you the amount of money you started in your appropriation, the amount of money that's gone equals the amount of money that's still on hand. So you can compare yours to make sure that you are accurate and that they are accurate. I mean, people can mispost. You're using lots of different numbers and many, many different numbers in your account system. So you can very easily miss posts. So please watch that and do keep tabs on your own budgets. Now that's the first one, and that's the most complicated of the budgets. The next one is the capital. Okay, let's say you are the highway super, and this year you need a very large new dump truck. And you know you need it because you're having very heavy duty repairs on the current dump truck. There's always the danger it will not survive the storm on Saturday, which they say is coming. So therefore you're in a situation where it's like, I've got to get a new machine. So I'll tell you the way we do it. First of all, most towns have what's called a capital planning committee. It can be called any one of a number of different things. We call it capital planning. And our capital planning is set up by bylaw, as probably yours is. And it may even state who is a member of that committee. Ours is a 5-person committee. 2 of the members are members of the finance committee, appointed by the finance committee to serve on this board. The third one is a member of the school committee, appointed by the school committee. Well, why are they there? Well, they're there, needless to say, because they also have a very, very, very large budget and frequently have a lot of capital that needs to be done. New roofs, painting, new boilers, all kinds of things that require a capital expenditure. The other 2, well, the first one used to be the treasurer. And when the whole board was created, I was treasurer, so I got put on it. Since I left back in around the year 2000 as treasurer, they have had treasurers that didn't live in town, so they couldn't be on the board. So since they couldn't be on the board, I've stayed on the board. So I've probably been on the board for over 20 years now. And the third and the 5th one is an appointee. Hopefully someone that perhaps has some building experience. We were lucky enough for a while to have an architect on there who was wonderful because he knew enough about buildings. You may want somebody who has vehicle background because if you're purchasing vehicles. As the time has gone on, our capital planning, how we work, has morphed into a very, very detailed type of thing. The application somebody applies has to include such things as exactly what you're buying, how much you will anticipate paying for it based on quotes, preferably 3, and also such things as if it's a vehicle, the repair history of the previous vehicle. So it's very, very detailed to what they give us. And by giving us that, we work with the applicant to determine the amount of money or the type of entity thing they're going to get. We don't worry about the funding source. Funding source is totally up to finance. And this is something I have to keep reminding the committee because I'm chair. I have to keep telling them, look, we don't care about the money. We just care about what it is. And like this year we're going to have an application for a cruiser. Well, we denied it last year, so it may be time. We're also going to have an application for a very large dump truck, the highway department, and something that we've never had before, which is a new vehicle for the fire chief, because the fire chief has always gotten a hand-me-down from the police department in the past. So those are 3 things. Now we also are looking at a major roof repair on the school. But that is the kind of thing that we really don't deal as a capital because that is so huge. And that has to go through, got an SBAB application out there. And it's stuff that we really don't get involved with. Although we have done things like getting involved with heating plants and things like that at the school. So we get the applications, we interview the parties, and then we sit down with them and we sit down as a 5-board committee board and determine which ones we're going to recommend to the finance committee. And then we meet with the finance committee and make our recommendations. Now, sometimes it's necessary for us to ask the representative of the different committee, the applicant, to come in because it's so specialized. Example, we had the police department requesting a, what's it called? A radar unit. And, I couldn't explain that for the life of me to them. So we asked the police department to come in. The highway department wanted a washer and dryer for their equipment, for their jackets and all. I had him come in because, frankly, I'm not competent to handle something like that. I could do it if it was a house, but not a one for a business. So it's far better to have that applicant in to also add to what we have in the file. So then once again, the finance committee determines what's going to be purchased. They also determine the funding source. And the funding source can be any one of a number of different things. It can be your free cash. It can be capital stabilization, which is an account we have just to pay for capital. It can be regular stabilization. Or it can actually be right within the budget. So this capital is very large frequently, and also very important to have, because if you don't have it in one year, and it's the kind of thing like a vehicle, it's going to come up in another year. So it's a matter of trying to keep things pretty even so you don't have huge amounts in one year and none in another. Okay, let's go down to debt management, because this is the thing where i.e. our school roof may well have to go out to borrow. And there are two different ways you can borrow. There is long-term borrowing where you actually issue bonds. We did that last with our school, when we built the school or put on the addition. That is a very, very detailed process with as I mentioned before, with the treasurer, the accountant. You have to hire a bond counsel and a financial advisor to help you through the process. You also usually get your bond. You have to get a bond rating to do it. Okay, time out. I got to find my notes here. Now, the state law specifies what type of goods you can borrow for long term, and also the term that they can be borrowed for. So some things are 7 years, some things are 5 years. It was interesting to watch over the years how very large fire equipment that costs $500,000, $600,000, $700,000 or $1 million now have a much longer payoff period than they used to. They used to only be $7 for 7 years for any kind of fire truck. And that was determined just not to be too efficient. If you have a smaller amount, you can go through what's called the State House notes. They are serial notes. The Department of Revenue Bureau of Accounts certifies them. It is much, much easier to do it that way. It's not done through a bank. You don't have to go out that way, but you do usually go out and get quotes from banks, and that's the one you choose. But it is not something where somebody buys the notes like it is with the large scale. That's the easy way to do it, I'll tell you now. And if you have something that you really, really don't want to go out for long term and go through the aggravation of borrowing, with the sale of actual notes, that's what to do. You go through the State House notes. Now you have also short-term notes, which are less than a year, and they're generally for a specific cause. Specific reason. For example, you have tax anticipation notes. If you are perhaps in a semi-annual position and you find yourself running out of money in, let's say, October. Your bills may not can be due at the earliest on November 1. That's if you get them out by October 1. And perhaps you don't get them out. So they're not due until December or January, the first half. So you're running short on money. So then you go out and you borrow on a TAN to replenish the till until you have the taxes come in. That's why I call it tax anticipation note. Now you also, if you are going out on a bond for a big project, you also have what's called BANs, bond anticipation notes. And the bond anticipation note is funding until you get your long-term bonds. Because as I told you, the long-term bonds are a very complicated, very long situation to go through. You also have something called GANs, which are called grant anticipation notes. If you have a grant, perhaps, but you need money to start it, or you need money to match it, or something like that, you go out for a GAN. These are short-term notes. These are very, very much easier because perhaps your treasurer usually has a list of banks that they go out to get quotes. So you call them up and you say, or you email them and you say, I'm going out on a TAN. I need so much money on this date, and it's going to be for X amount of time. Once again, it has to be for under 1 year. Now, debt exclusions. You hear that term a lot, and it's really hard to figure out what in the world we're excluding or what we're not excluding. Debt exclusions occur only when you have a capital project, and it's okay. If you have an exclusion, the good part of it about an exclusion is, let's say you have a 20-year bond situation. Once the bond is over, it's fully paid off. It is not part of the financing of the town. So you may be paying, let's say, an extra $75,000 a year for 20 years to pay off this thing and its interest. And that's right in your budget as part of the debt that I was talking about earlier. Then if it's not going to stay there, your budget would go down by that $75,000. Debt exclusions are something that people really kind of like because it's there while it's needed, but it's not going to be permanent. The other thing is a debt exception. And you need voter approval for this. And the reason you need voter approval is because it is a permanent change to your budget. It is a permanent upping of your budget even after you've paid for it. So you have the two different kinds of debt, and it's up to the treasurer, as well as a finance director, if you have one, as well as the administrator and everybody else to decide, and the finance committee to decide how you're going to pay for this very large capital debt that you have. Let me take a breath for a minute and grab some water. Okay. Periodically, you still hear about this thing called Proposition 2.5. And it's like, what is it? You may hear about it if you're in a collector's office, if somebody comes tearing in and says, my tax bill couldn't go up more than 2.5% under 2.5. Well, that's incorrect. But it's a common error that people make, especially people who are upset about their taxes. It essentially established a limit on the amount of property taxes that can be levied each year. In other words, it can go up 2.5% of the total levy, not individual people. It's restricted. So the levy cannot be in excess of 25% of the full and fair cash value of all taxable and personal property taxes, which is called the levy ceiling. And that's why you always say your budget or your amount you appropriate, your tax rate cannot be more than $25. because it can't be more than 25% of the total full and fair cash value of the real estate and personal property in the town. The maximum amount the levy can have in a given year is called the levy limit, which can be less than or equal to the levy ceiling. You really don't want it to be equal to it. You want it to be less than it. The levy limit increases in determining how much you have available, A, by your automatic 2.5% of the previous year's levy, and any what are called new growth. Now, if you share an office with the assessors or you deal with them at all, you've heard them talk about new growth. And what is it? New growth is any increase in the value, not as a result of property revaluation. So it's basically a function of building, new construction. Perhaps you have a solar farm that's just come on the rolls. That's new growth. Perhaps you have a brand new house valued at $1 million. That's new growth. So new growth has to be buildings or something that has been new onto the tax bill. It cannot be just because the values of houses are going up, because the selling prices are going up as they are. So debt management is a very, very, very important thing to do in a town. Okay, so I think we've covered just about everything. There was something else I wanted to say, and I think I've lost it right now. So just give me a second to get myself put together, and I'll figure out what I was going to talk about. Oh, cherry sheet. That's an awfully funny name for a document, isn't it? But there's a reason for it. Back when the cherry sheet was actually mailed out by the DOR to the towns, now it comes by email, it was on cherry colored paper. The receipts were. The disbursements weren't. I think they were on yellow, the stuff they were taking away from you. But it was a cherry sheet because it was cherry colored. So we still refer to it as a cherry sheet, even though now it's coming through on email. And the cherry sheet is the two big pieces of that are Chapter 70, which you'll hear about, which is education funding, and Chapter 90, which are roads. And these, of course, become part of your budget because it's money coming in. It's state aid. And that is one of the two very large pieces of your revenue anticipation. Now, you also hear a lot about free cash. Well, first of all, it isn't free and it isn't cash. And I really wish we didn't talk about it that way. Let me give you an example of something that made free cash for us. In 2020, I put in my budget some money to go to the conference in June down on the Cape. And of course, it was canceled. So I had no use for the money, and the money stayed in the account and closed the account with a positive balance. And that rolled over into free cash. Same thing happened in 21. I've had the money in for the conferences. Conferences didn't happen. It became free cash. So basically, free cash is where you don't spend what you were allocated to spend in your budget. Or on the other hand, it's where more revenue came in from a given thing than you anticipated. Why would more revenue come in? Well, for example, one of the things on at least on our town, the finance committee and the town administrator always put on the thing is excise taxes. And a perfect example is the other day I was working on the first commitment of the excise for 2022. The administrator walked in and she asked me, she says, what's it look like, the total amount compared to last year? And I said, well, I've got about 300 more bills, and I've got about what was it, about $10,000 more revenue. Once again, she's concerned about what that number is going to be. Then she, of course, has to take a piece of it out for abatements and such and non-collections and during that fiscal year. But at least she has an idea of what we're going to have in that first very large commitment. So if perhaps I collect $3,000 more than anticipated, that's $3,000 that can go into free cash because it was above the amount of the appropriation, the guesstimate. So free cash isn't free and it isn't cash. And people have to remember that when they're dealing with money and budgets, because it's everybody's favorite thing to say, well, it's cash, therefore we can spend it. Well, it's not cash. Our policy in Shutesbury is always to have enough free cash in the till, so to speak, so that when we have some of these big checks come up, like the school department every 2 months, the regional school wants $500,000 to $600,000, and we have to pay it. But if we were short on cash, that would be a problem. So we always try to keep enough free cash in the budget so that we know that we have the money to pay these bills. Yes, I know the taxes will come in, the taxes will pay them. We're on quarterly. But in this case, the school department wants their check on the 5th of February. And of course, the bills are due on the 1st of February. So usually what I say to the treasurer is, are you going to need money in order to pay this bill? And if he does, then I will transfer some of the money that I've already collected in that week, the week of the 1st, over to him so he can make his budget. This is called working together to make sure that we look good and we can do our jobs. Okay, I don't even know what time it is. I'm probably running. Oh gosh, I'm running very, 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 very early. Maybe we ought to, can we throw it out somehow for questions? Beth, can we throw it out for questions somehow? With the, what's it called? Nobody has any questions they want to type in?
Type in the chat and she will answer anything.
I'll try to anyway. Oh, another thing. Before I go any further though, most of the information I have, and most of the information you can get about any department is dealing with finances, is in a very nice little booklet called A Guide to Financial Management for Town Officials. This is basically basic reading. We usually give it to any new member on the finance committee, the select board, or just in general, anybody who's interested. It is put out by the Department of Revenue. And so you can go online. It's the Division of Local Services. So by all means, if you want a copy of it, you can actually go into their website and print it out. So I suggest you do that because it's a very interesting document to read, because it does give you all this information that I've just imparted to you, except for the stories of real world. Does anybody have anything?
What's the rest of it? A guide to
financial management for town officials. So it's not only for collector treasurers, it's got everything in it. And it's, as I say, it's available online through the DOR and it's local services. Okay, for cherry sheet income, do you record the individual items or take into account the debits before? Whoops, wait a minute, I've got to, okay. Let me see. For cherry sheet income, do you record the individual items or take into account the debits before posting? That's a question that would have to be asked to a town accountant, because they're the ones that will put it in. when it arrives. I would have. I really can't answer that. I don't know. I would think that a lot of the debits though are not into the same accounts or for the same thing as the credits. Because you get, let's say you get education and you get various grants. And then I know that in our case, the what's it called, charter school plus and minus and all that stuff. I know they put them in separately from the rest of the grant for the schools. So I would say probably separately, so you can keep tabs on the difference, the revenue you're actually getting and the expense you're actually getting. Because it's important that you know not the net, but both of them. Good, then that's what you're doing now. That's probably correct. Yeah, for example, here's something that doesn't have a credit, but it has a debit. As a collector, when somebody pays off an excise tax bill that's marked at the registry, there's a $20 fee. And the $20 fee gets given to the treasurer, and it sits there until the end of the year, or at some point during the year, when a cherry sheet disbursement comes through saying that they've taken this amount out of our money. Because we have it, we're sitting on X number of $100, and now they're saying, okay, therefore you're going to get $100 or $200 less in your appropriation. Yeah, that's good. Somebody else says they do it too. Very good. Yeah, see, that's an accountant thing. That's really not maybe it's a treasurer thing, but and I think I didn't do the disbursements, but I remember doing the receipts. Okay, anything else? Nobody has anything? Oh, come on. Any questions on collecting that I can answer? I've been doing it for enough years. Incidentally, I was also treasurer for about 15 years too. And went through a borrowing, a bonding. We went and got a state. We borrowed from the state for Title V, for people who needed Title V work on their septic systems. And we had to go through getting a credit rating and having our bond counsel. It was amazing. And it's a very, very long process. But it's important, therefore, that your records are up to date and accurate, because they require it to be in order to do this kind of borrowing. Okay, nothing. Oh my gosh.
We'll give one more minute and then they'll have a lot of time till the next one. But
yeah, unfortunately, I guess I speak too fast. Also, I'll tell you, I much prefer to be in person so I can wander around and things like that. It's much easier than sitting here and trying to talk.
Are there any different forms that someone in the staff would have to know? Like, because this is more the staff than the regular treasurer.
Yeah. Any forms for what kind of, how often do you require other departments to give you turnovers? Well, I'm not a treasurer, but I know that when I was a treasurer, for most of the departments are really good at giving them to me every week. The only exception was the library. They gave them to me every month. Some departments, when they got really big, because let's say they were getting dog licenses and they were getting clobbered, then they would actually give them to me much more frequently than even weekly, because they just didn't want the money around. Because after all, you keep money in your office, there's always a danger. We went through a siege back probably 10 years ago where there were several town halls in the central part of the state that were broken into, and they stole money. So that moral of that story is, don't keep your money on hand. Either lock it in a vault or preferably get it to the treasurer so it can go in the bank.
Last question, anyone? And then we're gonna give you guys a break.
Nobody? Oh my gosh, I'm disappointed. Oh, you asked about different forms. And I just don't understand what kind of form you're referring to.
So I didn't know if there's certain things that collectors and like an administrative person would do, if that different than a collector or treasurer.
I can't think of anything.
Okay.
I mean, it depends. Everybody develops their own forms, depending on what they're doing and how comfortable they are with whatever. So I really can't answer that because I'd be interested to know that. That would be an interesting thing to find out. Maybe we can find it out at school. Ask the different, at one of the levels. I think that isn't there a course, something about, it's not forms, but it's something anyway that we could ask them to bring in examples of what forms are used by in their office that may not be the standard that everybody uses. It may be interesting to find that out.
We also have our listserv. A lot of people ask different questions. That may be something people.
Oh yeah, that'd be a good idea. Throw that out there. See what. Go ahead.
One thing I would like to throw out to people is on our Mobilize site. If you're not on a listserv, please sign up through our website. A lot of people ask a lot of great questions. I'm sure that people will get off of this. Oh, I should have asked Ellen this thing. So she's probably on there as well.
I'm on.
So really make sure to sign up for that. The other thing is, if you are a treasurer and collector and new, and you're on this because you want to learn stuff before you get to annual school in August, you should really make sure that you sign up for our mentorship program, because it's a great way to have a seasoned professional give you the ins and outs of everything. So if you have any questions, you can let me know and sign up for that.
I agree.
When
Definitely.
I do all my plugs.
Yeah. I've done a lot of, not assigned type mentoring, but, I've been in this business long enough so that I've been known to drop in on different towns and help them out for a little bit, just to try to figure out what they're doing. When you take over, you don't necessarily take over a clean slate. And I've had cases where when I came here, I was the fourth collector in a year. The first collector was wonderful, but he decided he wanted out. Then they hired, let me see how it went. Okay, the second one, they then elected, because this was an elected position at that point, a woman who was brand new to town, had no clue. She lasted about a month. Then they didn't want to go through election again, so they had what were called CETA employees. A CETA was a federal funding program. And this young lady had no clue. So when I was elected at the general election, they told me, as soon as you're bonded, walk in and take over. And I did. And what a mess. And I'll tell you, what made it easier for me? My mother was a collector in another town. So I had questions. I got a hold of her. She helped me. She didn't need to, sit with me or run things over, but it was like, how do I do this, or how do I handle that? And one of the things that I had to do, because there was no indication that demands had been issued on a lot of excise tax bills, I hand typed. At that point, we were hand typing things, 800 excise tax bills that summer, so to get them out. So, you can inherit a mess without even knowing it. And then it's like, oh my goodness, or everything can be nice and clean, and it can be a wonderful experience taking over, but you
Ellen,
never know.
We have two questions in the chat.
Yeah.
How does a collector handle tax apportionments from the assessor?
Okay.
And the other one, you can do that one. Okay.
Okay. First of all, I assume you mean when somebody sells a piece of property and you're going from person A to person B and person C kind of thing. That depends entirely on your computer system, what you have and how you can do it. Because generally, what I just did, I had a real complicated one. I had one where a parcel was sold. It was a very large parcel, had a house on it. So one person bought the house and a little bit of acreage. Then there was a little bit of acreage that was sold to an abutter on one side, a little bit of acreage sold butter on the other side. And the fourth piece was kept by the original owner. So I had a 4-way split. So the assessors gave me the number, and frankly, even my computer people couldn't figure out how to handle that because it was just so convoluted. So what we ended up doing was we calculated it all, and the assessors wrote a letter saying, this is here's the assessments to everybody, here's their taxes. And it got more complicated because it dealt with CPA, because now there was CPA on the house that there wasn't CPA on before, and it was a nightmare. So I ended up actually writing them a letter, sending them the copy of the original bill and saying, this is your portion of it, because it was the only way I could think of to do it. Because normally you just do it if it's a 1-2-1. That's very easy to do because you can do a revised and omit and a new bill, and if your system allows it. Forms, can you confirm the forms assistants can sign off? It's a regular form. The only thing an assistant cannot sign off on is the instrument of taking. Other than that, the assistant can sign off on everything else, I believe, according to the law. When is the training? In August? That's okay. You answered that. Okay. Anything else? One comment on municipal lien certificates. Assuming you are doing them manually, be very, very careful. Actually, be very careful even when you're doing it on machine, because there can be liens out there, tax title, that you're not aware of. You should perhaps have a list of all of the accounts that are on tax title, or somehow have them flagged in your system so that when you do a municipal lien, you know that you have to indicate that it is on tax title. And that little line on the bottom, at least they're on mine, that say, I know of no other liens on this property, you cross it out. Because otherwise, you theoretically could be in trouble, but then again, also they should pick up on the tax title when they do the title search. But just the same, it's a good idea to give the lawyers all the information they need, because a lot of times you're working with lawyers that are not from Massachusetts. They have no idea what we're talking about when we're talking about a tax lien. Okay. Nothing else. Nothing else.
Oh,
wait a minute. Is there another one? Wait a minute. I think I see a new message. It says new message down below. What if the apportion bill becomes past due and needs to move to tax title? That is a really good question. What you would have to do is you would have to put it on tax title. And of course, just like a bill, because it was a portion this year, it would have the name of the original owner and the name of the new owner of that piece. And that would be and that would be how you would do it. I mean, I do that anytime I have a sale. It's John Jones, formerly owned by Sally Smith. And I've notified Sally, of course, that she is going to be on this document, but as a courtesy. Okay, what is this? Ours are flagged in red for tax title. Oh, that's very good. On an MLC, is it legal to include outstanding? What's 40U violations for the whole? I don't know what a 40U is. I have no idea, because we don't have any such animal. To include these amounts as informational, but we had a real estate broker call us screaming about it. Okay, I assume it's some kind of what's a 40U? Non-criminal violations such as weed, trash, snow removal. And can that violation, does that ultimately go on the tax bill? So it's lienable? Yes. Well, then, yes, you should. If they're asking for a specific unit, typically include these amounts. I would include them. And Tuffy's yelling about it. I mean, it still could mean that the parcel, the whole thing, is going on tax title. I'm assuming this is the kind of situation where you have the owner owning the land, perhaps, and the payer of the tax bill the piece of the tax bill owning the building, is that, or a piece of the building, a shop in the building? I'm assuming that's, it's okay to, yes, of course it's okay to. Well, they record it anyway with the line done. Condo association should be responsible. Yes, but we know already the condo associations won't necessarily pay the bills because we've run into that. Yeah, so it's a condo situation. I would still notify them. I really would, because if the condo association doesn't do it, then you can still take it on tax title. I mean, it's your, and the only problem with taking on tax title then, of course, is then you end up the town ends up perhaps having to pay for non-paid condo fees on that particular unit. I don't deal with condos, thank God. I have what called two condexes, which are two houses that are, or two residences that are together, and somehow, and I can't quite figure this out, there doesn't seem to be any value put on the ground, on the land it's on, and I don't quite understand it. But I would definitely, I would put on, let the real estate broker scream. What's he going to do? If he screams enough, tell him, I'm sorry, sir, but, or ma'am, but it has to be, you have to be told about it. And because it could become part of the lien. It's a shame that I know people can be really grouchy about things, but it's still important that we let them know. Just out of curiosity, is this unit? No, that wouldn't work. Does the condo, the whole building, does that have any kind of a mortgage on it? Because if it does, then usually you can get things paid through the mortgage. Oh, no, okay. Usually you can get it paid through the bank. That's one of my favorite tricks. If I'm about to take tax title, I notify the banks, and usually the banks pay it because they don't want me in the middle of any foreclosure they may be doing. Okay, we add as informational. Yeah, exactly. Yeah. Oh, I agree with you. Yeah. Add it as informational. Yeah, I have informational stuff. I have one that says this property, we have a lot of chapter 61A or 61 rather parcels, either classified forestry, classified ag, or classified rec. And I put that on in an informational note that, there may be rollback taxes. Not that the lawyer knows what rollback taxes are, but it notifies them. Or I also say this property has a personal property tax bill, second residence, and please determine who's going to pay that. Hence, going forward, is it going to be the old owner? If the new owner is going to live there, I mean, they have to make a decision on that. It's just to notify them what's going to happen in the future. So I have these little ticklers that go on mine. One tickler that goes on almost everything is this town adopted the CPA, and it's part of the tax bill. And because it's listed as a betterment, quote unquote, that was the way my program was programmed. So therefore, they sometimes don't want to pay it because they think it's nothing to do with the property. So I tell them it's a CPA and it's part of the property tax bill and you got to pay it. And they do usually, if they're from Massachusetts. Okay. Well, that was an interesting set of questions. As I say, I know nothing about condos, and I'm glad I don't.
Well, I'm glad some people started asking questions. That's great.
Whoops, do we have any more? She says lucky. Not the condos. Oh yeah, I think I'm very lucky not to have condos.
They probably have more in Amherst.
Oh, yeah, Amherst has a lot of condos, but they also have a lot of houses that are rented. Huge. I mean, I can drive down streets right near the center of town, and every single house will have 6 or 8 or 10 cars parked on the yard. And you know what it is? It's all students, because now they're back and it's there again. I mean, yeah, there are condos in Amherst too. What is a betterment? Okay. Betterments can be a number of different things. For example, let's say you have a certain part of town that has water. And the water, let's say they have a water main break and they have to repair it, and there's a very large cost associated with this, or they put in the water for an area. Well, then the whole town doesn't pay for the water if it's only benefiting this small group of people. The small group of people pay it, and it's called a betterment. And the betterment gets filed at the Registry of Deeds so that it becomes lienable on the property, so to speak, and it becomes public record that it's there. So some people are betterments, other people don't. In this case, they just used that because it was they didn't have anything in their system already built to handle the CPA, because the CPA, of course, was only on the Cape with the Cape Cod land, whatever it was called. So when the state adopted it and the towns adopted it, they had to have a way to handle it. But that's what a betterment in reality is. It's something that only deals with a certain group of people within the town and is only billed to them. Good question though, Monica. So hopefully you don't have betterments and you don't have to worry about them. Oh, Beth is busy on the phone, so we'll wait till she's done. Never ends, never ends.
I'm letting Diane do it. It's like, I can't answer it. So why don't we end this session now? Thank
Okay,
you so much for, whoops, is there another?
It depends on what they are and what they want to do, whether they want to pay it off during the sale. A lot of times the answer is no, it just goes on to the next owner. I have Title V, which might be considered a betterment, I suppose, but it's really not. But that a lot of times, if they're at the end of the Title V, a lot of times that's paid off at the sale. But betterments, no, they're usually not. There again, if it's a small amount, then they may decide to pay it off. Or the new owner may want to pay it off because they don't want it hassling around for the next umpty years. Anyway, okay.
Well, thank you so much.
Oh, sure.
I really appreciate all of your wealth of knowledge. And I feel like I'm ready to take the exam because I've learned all the stuff in the last 2 weeks. So
I bet you have learned a lot or heard a lot.
I hope everyone else has learned a lot, and we will see some of you next week with the intro to the Treasury.
Yes. Enjoy, everyone. And
Thanks.
Please be careful if you're out on the weekend, because from what I'm hearing, it is awful. Going to be awful. Okay, wait a minute. If there are betterment balances, whoops, I've got to go because I'm having a phone ringing.
Okay, thank you very much.
Yeah.